Hello, everybody, to one and all. It's my honor and privilege to be here moderating this session. The topic, as you saw on the screen, is mapping the investment opportunity. So what we are going to do in the next 40-45 minutes is look at how real estate market looks today and what we can expect in the next 4-5 years. We have a new government at the center. We'll also ask each of the panelists what they expect from the new government and what are the 3 challenges that they would want the government to sort of take care of. Just to set the context right, India's real estate market has attracted over 14 billion capital, and that is only equity money, in the last 4 years. And it is going to go up only from here on, from what we see in terms of activity, in terms of government change, in terms of policy and everything. So we have panelists representing each asset class in real estate. We have Sharad to sort of represent warehousing, which is really, really sort of attractive and hot right now. We have Mr. M. Murali to represent the resi side of the story. We have Jai Gandhi, who I sort of call him an outsider, insider perspective. We also have Girish from Godrej Fund Management. So I'll start with you, Sharad, and sort of understand. A lot of activity is happening in warehousing, and every second day we report about JVs and people coming and pouring capital, and lot of things are actually happening. And developers are also venturing into sort of tide the wave in that sense. So my question to you is, what is the investment thesis? I mean, why are they coming? Apart from the whole infra status, GST and evolution of warehousing and all of that is fine. But what is the exact investment thesis that you can highlight for us? And also, I hope we don't get into a situation 5 years down the line where we're like stuck with oversupply and people are like thinking the market is slowing and all of that. So can you throw light on that, please?
Sure. It's firstly, it's a pleasure to be here among such a distinguished panel. So to kick it off, I really echo everything Ankur had mentioned earlier on. I think one of the key words that you will repeatedly hear today in the context of Indian real estate in general, not just warehousing, is that it's patient capital. And I think, at Indospace, something that we've benefited from and we will hopefully continue to benefit from is investors with patient capital outlook for this sector in particular. And that really kind of drills straight into your question. I think that the mindset, why you're seeing such a tremendous flow of institutional capital that's come into warehousing and the logistics sector in general over the last 12 to 24 months. We were certainly pioneers of being able to and have the benefit of being in the sector for 10 years. So we started it. We bought grade A institutional quality warehousing and industrial units to the country. And I think that providing that investors have a longer tenure mindset, they're not going to make a quick buck by coming into the sector in 2 years, 3 years. Warehousing in general is a longer gestation. It takes time to build a 1 million square foot industrial park. It can't be done overnight. And it's all about scale. And in order to benefit from scale, you have to have in-depth industry knowledge, a wide geographical presence. And I think that we need to be able to look at offering a pan-India solution to ultimately our customers. But patient capital, I think, is really critical.
But what exactly, sorry to interrupt, what exactly is the investment thesis? For example, evolution, GST, and infra status apart, what exactly people are chasing in the segment?
Well, it's a mixture of everything. I think warehousing is one part, industrial is another part. Industrial obviously caters to the manufacturing output, both domestically and for exports. I think on the warehousing side, that's where you're seeing the biggest demand drivers.
Correct.
And the investment thesis is to capitalize and be able to tap into the increasing consumer demand that India is facing. Do I see that declining? No, not in the short term. And I think in the long term, consumer demand, consumer growth is strong, especially if you take specific industries such as e-commerce. And if you look at where that's come from, $3 billion in 2014, $70 billion projected at the end, by 2020, and growing exponentially. Retail has opened up, so there's a tremendous amount of demand in that. Third-party logistics is something that's continuing to grow. So these are the key demand drivers, and specifically in the warehousing side, developers like ourselves are looking to provide space, and that absorption we still see continuing to grow, and there is a shortage of grade A institutional supply. So the thesis is to capitalize on the demand story, and right now there's a shortage of supply. And
what about a situation 5 years down the line where there is a possibility we might get stuck and say there is a lot of supply? We have seen that in other asset classes, and therefore the question.
We have, and I think we also have the benefit of having learnt from the other asset classes. One thing we need to remember is that the institutions chasing the sector are not new to real estate. They're not new to India, per se. People have learnt their lessons. And it's the responsibility of the likes of Indospace to be able to provide a thesis and a sustainable growth story linked to the demand. There are certain areas of the country where you will go and provide ready supply and have a speculative product. But I think going wild and having a situation of oversupply, I think that developers have become a lot more smarter than they were 5-10 years ago.
Okay, thanks. I'll come to the resi part and try and understand from you, sir. Affordable is the only segment that is working in terms of capital, in terms of sales, everything. That is the focus right now. But do you think we have moved in the right direction? I mean, that was the need of the hour. And going forward, that will be the segment that will take the industry to next level in terms of sales, activity, investment, all.
We heard from our friends in the morning, housing is the only industry which is going to be the transforming industry for the country. What Prime Minister, final touch, Sabka Saath, Sabka Vikas, Sabka Vishwas.
Correct.
All that happens only in housing. And next agenda for the government is going to be housing for all by 2022. And government is very, very serious in making this happen. And that will come by affordable housing. And you could see a lot of incentives coming up in the next budget for making sure that the housing is provided across. Who will make money, who will lose money, it's a separate deal. But this is going to be the engine of growth. Rest all will gain because of that. And we talk too much about the long-term capital. My favorite quotation from Warren Buffett, I don't know whether it's applicable to US or not, it's very much applicable to India. He says in long-term everyone is dead. Nothing else is there. So India is starved with capital, more so into real estate for longer period of time. Any business for that matter, India was starving for capital for longer period of time. So one has to know how to use this capital in a more effective way. That's very important. Come back to this housing. Housing is going to be the engine for growth of the economy itself, not only the real estate. Hence, Government of India is very, very serious in addressing this. So this will make a big difference. You could see the companies in the housing, as Ankur was saying, people are moving towards manufacturing style of functioning in the housing. That is going to be a major game changer. And only a few brands are going to sell. Again, he talked about 13,000, I think Salil talked about 13,000 developers. 3 years ago when I was addressing Credai, I talked about it. It was a ballroom meeting. I said in real estate, in the next couple of years, conferences will be held in boardroom, not anymore ballroom. That's what is happening today. You could see about 30 to 40 developers in the country will cater to about 95% of the demand. The rest all will be there. Maybe 13,000 or 130,000 people or 3,000 people will be catering to remaining 5% of the market. That's where I see the market is moving towards. So housing is going to be the engine of the economy itself, Indian economy itself, driver of the Indian economy itself. And it is going to be the lead.
But have we come to the right segment after a long time? I mean, people say that, this is where the demand lies. This is where people want to buy. This is the segment that people are comfortable with. So have we come to end user demand segment after going through like all the phases, up, mid-market, luxury, everything up and down, and then we have come to the right segment in terms of focus?
6 years ago, I was lecturing IIM Bangalore. One of the students asked, where do we see the demand in India? 6 years ago, I said, in real estate, housing particularly, or any product at this point of time, the demand is there for the next 30 years. You may have ups and downs, but it's a steady growth for the next 30 years. Now 6 years has passed. If you ask me whether it has come down to 24 years, no, it has gone to 32 years today. because the demand is increasing. So there has been a demand. Any product today, whether it is warehousing, whether it is rental homes or co-working space or affordable housing or luxury segment, there has been a demand. But what is killing us is this greed of the developer. That is what is killing us. They think, one has to be very clear. When I build a home, I must know who the customer is. Unfortunately, developer community, they thought they are building home for them while designing it. Whereas they were targeting somebody who's earning, 10 lakh per annum or 20 lakhs per annum. But you must shift. You're not building a home for you. So that is one. The second one, everyone thought, by getting Amitabh Bachchan for your housing project, you are looking at, selling affordable housing at 20 lakh. I really liked Deccan Aviation. I do not know whether you're all.
Yeah.
It was promoted by Captain Gopinath.
Correct.
Then Kingfisher. See, Kingfisher should advertise with Vijay Mallya and some good-looking girls on the sides. But Air Deccan should not advertise with, good-looking girls. So he should position himself as a brand ambassador. That's what he has done, rightly so. It did well. So one has to be very clear the need between what they want to provide for and the greed, which is what is taking away. So there has been a demand, continuous demand in every segment, including luxury, there is a demand. But the greed of too many people moving into it created the excessive supply. That's where they suffered. It's not because of the demand they suffered.
Okay.
There is a demand.
I hope they learn their lessons. To get some perspective on commercial, Girish, I'll try and understand from you. Obviously commercial, everybody speaks about it, that how it's doing well in terms of everybody chasing that. But not many people are focused on the development cycle of it. Everybody wants to sort of get into constructed and leased assets and sort of buy that and maybe list it 5 years down the line. But you have two funds, which are basically, I think one fund is focused on taking the development cycle. What's the capital focus there? Because I think this is the stage where people need to go, take the development risk and put equity at development and land stage. So what's the kind of focus and capital focus that you'll see going forward on that segment?
Hi, good morning. Look, what's happening in this space is, if you look at the macroeconomic factors, they are totally in favor of demand. Now, if you look at supply and demand, for the last 4 years, demand has been consistently outstripping supply. If you look at rentals, they are constantly escalating. If you look at vacancy, they're at all-time low. I think it used to be 20% in 2012. Now it's about 12%. And if you look at grade A vacancy, it's actually sub 4%. So the macro factors are at the right space, but the reason why not a lot of developers chase development, because it's a speculative development. You need to put in a lot of cash upfront to build some product, focus on designing and focus on the right location, the right product, without knowing your end customers, as Mr. Murli also pointed out. So I think in terms of our focus, we have two funds, which one is called the Godrej Build to Core, which is focused on selecting the strong office location, not focusing on IT, but front office development, building it out, getting a best-in-class architect, focusing on front-end demand. Also what has happened was a lot of demand has shifted. Earlier it used to be mostly traditional demand from BFSI or manufacturing or consumer. Now you have new sources of demand. You have co-workings on one hand, you have technology on one hand, you have e-commerce. So all these segments are actually improving your demand diversification, which means that, and also given the NBFC crisis situation, it makes good sense to put up commercial demand, because most of the big boys, the likes of Brookfield, the likes of Blackstone, or large institutional capital, they mostly like to enter into what you call institutional grade asset. So somebody needs to create those kind of assets. So that is why the focus is either you build something grounds up, or you take something which is already present, retrofit it, reposition it, repurpose it, and eventually make it an institutional grade asset.
But do you think going forward, investors will have to put money to take care of the whole development cycle instead of coming at constructed and lease stage? Do you think that will be the focus going forward?
I think capital is already coming in the development stage. You have a lot of institutional capital chasing grounds of development. Now, the whole issue, which also Ankur alluded to, is the asset liability mismatch. If you get the right kind of capital, the right duration, you will get the right kind of assets. Now, over the last many years, in fact, last 4-5 years, you have $8-9 billion of equity capital coming in commercial real estate, which is probably 3 or 4 times what came in the previous 4 or 5 years. So capital is already coming, but obviously the capital, just as Mr. Muli mentioned, there used to be 13,000 developers many years back. Now there are a handful. Similarly, there used to be 100 plus investment managers or fund managers. Now there are hardly 4 or 5 or 6 or 8 of them. And people are focusing more on platforms rather than a pure blind fool kind of capital. So the capital structures have changed. The thinking around has changed. And also it's very important to focus on the right strategy. Are you making an extended CBD type of development? Are you focusing on front-end, BKC type of development? Once you get the right strategy in mind and the right clientele, see, eventually the occupiers are the same. India is a growth story. The jobs are getting created. There will be demand for office space. But the question is, do you make the right product at the right segment to get somebody to pay $40, or do you make a product to get somebody to pay $100? Okay. So there is demand across the space.
Okay, thanks. Jay, I will come to you and try and understand. Tell me, I think we saw the listing of First Street in India, and that was a huge thing because it took like almost more than 10 years to sort of reach that stage. What about public market for developers? How can they tap into it, more from REIT perspective, more from commercial perspective, and also from Resi perspective? Because we have not seen any developer go public in the last 10 years. So if I think Shriram Properties is prepping for it, if he does it, he'll be the first one to do it in the last 10 years, almost a decade. So how, I mean, maybe from policy perspective and maybe from, what needs to be done, how developers from across the asset classes, they can tap into public market?
So like you rightly said, on this panel, I am an outsider. We're service providers.
Yet an insider.
So we work across all of the sector and the specialities that we are speaking about. Before I address the question, a couple of sort of broad points. One is policy and the changes that the policy has undergone in the last 10 years has actually helped each of the 3 classes that we're speaking about. We're talking about the days of 2005, 2006, when a narrowly defined residential construction with a local partner in a time-bound manner was all that was allowed. And from there, we're now in a sort of space where most type of investments in the real estate, in the broader real estate sphere are permitted. And so we are seeing a lot of capital. One of the benefits of that is that institutional capital is developing the habits that institutional capital is used to in the space. So you have a lot of sophistication amongst the developers. You have a lot of sophistication amongst the service providers and all of that. Sort of as far as exits and as far as access to public capital is concerned, I think REIT will probably be the premier option for exits. What we're hearing is that on the back of the successful listing and, by all means successful performance, at least till now, of the REIT, we're hearing that there are players who are prepping for getting themselves into a REIT listing mode. This is both on the developer side as well as on the side of, for example, large funds who have inventory and are looking to get to a place where they can continue to remain engaged with the asset as a manager, but get some kind of an exit from the public listing. The SEBI is also thinking of a private REIT option. For those of you who follow this, there is a private InvIT option that already exists in the regulations for private infrastructure trusts, and there is discussions within the SEBI of allowing something similar for the REITs as well. I think if that happens, one of the hesitation that some developers that we know have is just the amount of time and the amount of effort it takes to get a listing of a REIT done. It requires a lot of sort of background preparation, all of that, and then you are taking the risk on the market. But if it is a private REIT, then you have the ability to do a club deal. You have the ability to do a sort of an arrangement where you reasonably assured of the outcome. So I think that will remain one option that will only increase with time. As far as IPOs is concerned, honestly, like you rightly said, there haven't been too many. It is time for somebody to test the market. If anything, at least the market seems to be generally going in the right direction.
So what's your outlook? In the next 1 year, we see one more REIT, one more developer going public.
I would hope certainly more than that. There are a lot of us out here who would want there to be more of that.
Yeah, correct, right. I hope at least one happens. So, Shaira, to talk about we talk about the opportunities in warehousing, but capital is not a problem. I mean, in resi and commercial and other segments, people say this kind of capital is problem, this kind of, but in warehousing, capital is not a problem. What are the challenges? I mean, we were discussing about land acquisition, getting a clear title and all of that. Take me through the challenges, because everything is like, the JVs, big money, big bucks, everything is written about and talked about. Take me through the challenges that you face despite being one of the biggest in industrial real estate space.
Sure. So I think the benefit, as I mentioned earlier on, is that we've had 10 years of experience in trying to build up a scalable portfolio. And the key challenges for anyone, even for us, continuing and anyone coming into the sector is definitely at the land acquisition stage. That is invariably, again, whether it's residential or whether it's commercial or whether it's on the industrial warehousing side, something that it could go very wrong, it could go very right, but you have to be able to budget and be able to tackle it head on, have the right infrastructure in place internally within your organization to be able to really capitalize, and speed is key. That is where you can't afford to be patient, because ultimately you've got to get, whether it's a resi building or certainly on a warehouse, you've got to get off the ground. So the pre-diligence that's required, the diligence process during land acquisition stage, the due diligence legal title is absolutely critical. There are certain locations where that's more difficult. There are certain locations where it's much easier. We can do it in partnership with local authorities, which certainly makes it ideally a lot more clear and transparent. But I think they're the key challenges that anyone's going to face. It's the land acquisition stage. Then it's really about providing an end-to-end solution for the customer. So the big multinational guys that are coming in and looking to expand within India, they want to be partnering with a developer or a partner who can offer an end-to-end solution, who's not just going to build my real estate, who's going to operate and manage my park, who's going to be there for the foreseeable future, and be able to offer additional technology. And I think that is where we'll be able to distinguish ourselves from others that may be coming in, because you've got to be in it for the long run. You've got to be an end-to-end solution provider.
But like I asked you earlier, do you face, I would say, competition? Not so much, because you cater to a different set of clientele, but do you face competition from the kind of JVs and developers who are venturing into it, or maybe from unorganized players? Because they obviously have, from pricing perspective, they have certain bit of advantage, and there is a huge unorganized market for warehousing. Do you look at that as healthy competition? How do you look at that?
So two parts. I think on the unorganized part, do I look at that as competition? Not necessarily. It kind of almost has run in parallel. What's happened is there's been an evolution in mindset of the end user. They want quality. They want grade A, compliant, efficient space. So I think that, historically there has not been that product in the market, whether you look at industrial units or warehousing facilities. And if you are a multinational tenant, you're not going to compromise on quality for a few rupees a square feet. So I don't necessarily think there's competition from the unorganized sector. Yes, in the last 12 to 24 months, there has been a number of JVs that have been announced. I think we welcome competition. I think it's a good thing. It further institutionalizes the market.
Correct.
I think this is a sector that we're looking to be part of and pioneer and lead the sector going forward, and we'll continue to do that.
Correct.
We have a 10-year head start on a 30 million square foot portfolio, so we're doing enough right now.
Yeah. Okay. And resi, obviously, there is some bit of challenge in terms of capital. Obviously, equity money has, literally sort of gone to 1%, 3% out of the total capital flow. There is no equity money in resi. And do you think with the kind of focus developers have now on affordable housing, and we have HDFC backing, we have a lot of ADB and IFC backing affordable housing projects, do you think, with the right kind of focus, people will be able to sort of strike partnerships which are long-term in nature, patient capital, like Ankur mentioned in the first session?
Capital not available is a myth. There is tons and tons of capital lying just outside this door. Plenty. Capital is available for right set of people, right set of products. That's very important. Housing, in fact, I have to say no to several people. That's the situation
But we're not
today.
talking about debt capital. We're talking about equity capital.
Equity.
Is that
I'm only talking
available?
about equity.
Okay.
We have never borrowed money for land acquisition. We have raised close to
Why
about...
I asked this question, because in the last 4 to 5 years, what we have seen that NBFC is playing that financing and refinancing game. And that is the reason why they are where they are actually. So in that context, is enough money available in terms
Again, I talked about the greed. The people who are greedy, they all suffer. People who really look at long term, they all end up being winners. Equity money is available plenty. Last 5 years, what has happened to NBFCs? There was a craze, kind of herd mentality. Okay, I am able to deploy 25%, 23%, 18%, 21% without understanding. With an entrepreneur, when you invest money in real estate, it's equity. You need to assume that it's equity. There are two sets of thinking we need to have. One from the lender side. You need to understand you are investing on a land or on a project where if it gets struck, you have no other option. And in India, despite legal mechanism, it takes long time for you to recover your whatever the investment. So rather you go with the equity. On the other hand, you are sitting with a set of people who think that is equity. The understanding from the developer community, they think any third party money, you don't need to pay back unless and otherwise project makes it money. Okay. This is the thinking with which many people work. So unless and otherwise, there are people whom you bank upon, who talk about governance, who talk about compliance, who are worried about their relationship and building business on long term. For us, we never got stuck on any equity. Anytime, whenever we wanted to raise equity for any project level or company level, we have been able to get it like this. Not only us, there are, I'm sure...
You obviously have an advantage, but I'm talking about market in general.
No, we have the advantage just because we are not being greedy, just because we stuck to our basics, just because we focused on governance and compliance, just because we focused on building long-term business. Nothing else. It is not that we are, we have come from moon or sun. No. We are very, very ordinary mortal. We realize we are just ordinary. We need to be grounded. That's the only difference. And we put the greed part away. People, institutions, again, who have put that greed part away, they have all been very successful. They have made money. It is not that they have not made money. Everyone has been making money. So there is tons of money available. I have been meeting a lot of people on the investor community. Wherever I go, they all feel bad that they are not able to deploy. For example, one of the institutions from Singapore, their allocation is about $1 billion every year. They are not finding the right partner to invest. This is the problem. Likewise, I have met at least about 8 or 9 people who have got offices in Bombay, whether it is a fund from US or Hong Kong or Singapore or Canada. They are not getting the right partners to deploy. If these 8-10 people alone, whom I know I met very recently, if their money is available, there is no, supply available for that project today, as we speak. Equity, it's not debt.
Okay.
That's the issue.
And because we are talking about capital, what's happening on your IPO? What's the status of that? Are you going to sort of file it in the next few months? Because we have a positive sort of market sentiment with your favorite Mr. Modi sort of coming back to power. Are you going to do it in the next few months?
Market is going to be very, very good. Because people have been very sensible to give the right mandate to the right set of people. Hence, market is going to be very, very sensitive. But we need to understand there will be some short-term pains. But long-term, a lot of structural changes which are being implemented by the present administration, which is going to create some short-term pain. But long-term, it is going to be good. IPO, it is not only us. I'm sure there are, as you wished, there are at least another 3-4 people will come in, is my view. Probably we could take the lead in getting this journey on properly. So I see...
But what's the timeline? 6 months?
I cannot comment any timeline. It will be much faster than what we all hope. The economy is on the growth path much faster than we all expect. Since I am bound by some framework, I cannot comment. But much, much faster than what we all
A
expect.
quarter maybe. Yeah. So then I'll come to challenges in commercial. I think again capital is not a challenge. The performance of the market is not a challenge. But when you go and strike JVs or maybe deal with a developer to sort of build a commercial sort of building grounds up, what are the challenges that you face? Are you able to find the right partners for the kind of money that you want to put in?
So I think it's easy to talk about challenges in developing a greenfield commercial asset. So I would like to bucket them in 3 or 4 criteria. First being land acquisition, which my friend also mentioned. It's very difficult to find a piece of land with clean and marketable title. I think the bigger problem is that because these are all physically maintained and there's no digitization of records or land records, maybe in Sasbara in Bombay or similar comparable in other cities, it's very difficult to get clean land title. Second challenge is, essentially if you're looking to buy a prime piece of land, the party on the other hand is a local developer or local land owner who has, that's the only asset he has. So it's very difficult for them to part with that piece of land. And the valuation gap between bid and ask spread would be roughly 2x, 3x. That becomes a huge challenge. The third biggest challenge is approvals. Obviously, in any development, whether it's residential or office, you need over 100 approvals across different bodies, across cities. The good part or the nice part is these bodies don't talk to each other. And so it becomes really challenging and you don't know what are the costs of that approvals or how much time it will take. So getting approvals is a huge, huge challenge. I think the last issue which is facing in commercial, which is GST. Because if you're building commercial real estate from a leasehold perspective, you don't get GST credits, which you would do in a residential, which you sell, or if you do a strata in commercial. So it becomes your overall cost of development of the product to bring it to market becomes really high, which makes it really challenging to build up a affordable quality product and rent it out at the right rates.
Oh, okay, understood. Jay, make me understand. We were speaking about it that day, and you told me that how the market needs to go through a lot of evolution. I mean, it has gone through a lot of evolution, but we need to do more to sort of get the financing that the real estate market needs. Take me through that. What kind of changes we need? What kind of focus can the government give to changing and tweaking the regulation and policy framework to sort of bring in more money?
It started out as being a plain vanilla equity investing
Correct.
model, and I'm talking sort of more from the international investing community's perspective as opposed to the local structures. I think there were 2 sort of parallel changes that have happened. The policy is sort of more or less tracked for the domestic as well as the international investors. I would think that 2012, 2013 was a bit of an inflection point. In the local market, you had the AIF as an option coming up, and you saw quite a few funds doing quite well for themselves, investing in local sort of residential projects mostly, and then sort of moving on to other type of projects. At the same time, you had the first time that a debt was allowed in an Indian real estate project, in warehousing, in commercial. What that has sort of allowed investors to do is create a proper capital stack. Ankur spoke about this in the beginning of the session as well, that a capital stack that looks closer to what they are used to in the international market allows them to sort of build appropriate levels of leverage to improve overall returns. From a policy perspective, honestly, there have been a lot of liberalizations that have already come. Couple of things is that one is sometimes there is flip-flops, especially in the FPI debt investing regulations. There have been quite a few sort of 2 steps ahead, 1 step behind kind of changes. I think we've gotten to a place where it is stabilizing. Even the GST that Girish was talking about, and the RERA, and all of the legislative changes that have come in, I think more than changes, stability will help. So, let the industry get used to operating in the new regime that applies. Make it clear as much as possible. Don't leave too much gray areas. And honestly, that is one thing that this industry more than anybody else has suffered from. So those would be the key things that I think would help from a policy perspective.
Okay, understood. I hope right people are listening to that maybe. And now I want to talk about the outlook. I'll come to you, Sharad, again and try and understand, what kind of money are you putting to work in the next few years? That will also give a sense to people as to what kind of money is going in that asset class. If you're putting X amount of money, probably we can sort of estimate and figure out how and where the sector is moving. So what is your plan? What kind of parks are you taking up? What kind of money you're putting in? And what's your outlook for this asset class in the next 5 years?
Great question. So I think the industry itself, look at logistics, expected to grow to about $215, $220 billion by 2020. Some research reports are expecting that to double by 2025. We ourselves at Indospace recently raised just under $600 million for our third development fund, and that really is to continue to invest into Greenfield projects, into developments across the core markets in India. We're currently in 9 cities. We're looking to take that to 13 cities across the country and really offer a pan-India solution to all of our customers. So that's on the development side. Obviously, with other pools of capital that we have, with strategic investors like the Canadian Pension Fund, we'd recently, in the last 18 months, raised a pool of capital there which could grow up to $1.2 billion. So significant pools of capital is what, along with ourselves and GLP, where we've recently done a strategic joint venture, the ultimate vision is to grow our portfolio up to 120 million square feet. That is something that is our vision over the next 5 to 10 years, which we believe is sustainable and achievable. Right now, the task in hand is to get to that magic 50 million.
But is there a number you're quoting in terms of how much you'll put in? You gave me the portfolio size, but the amount of money, any indication on that?
Well, first I've got to deploy $600 million first. Okay. That will, to give you context, that will give you an additional 20 to 25 million square feet. Mm-hmm. So you could do the maths as to how to get to 120.
Understood. Also, did you speak to maybe any of your LPs after the election results? And what was the initial reaction? How positive are they? How bullish are they? I mean, did you hear anything from the international LP base?
No. The answer is we've not had discussions in the last 3 or 4 days with LPs. I think for us as an investment manager, what's important and critical for our investor universe is continuity. Continuity in terms of reforms. So agnostic as to which part of the government comes in. I think what's important is we continue to work on making GST more transparent. We have certainly in our business seen tremendous benefit now, albeit slightly delayed benefit from GST. Tenants are now getting their story right. They're understanding consolidation and what that means. Make in India is a big part, and we are the benefactors of Make in India as a developer. So I think as an infrastructure per se, as long as the government continues to invest in infrastructure, connectivity is paramount to making logistics and its sector feasible and more efficient.
Okay. Girish, tell me, across, I think you have 2 funds commercial. So between these 2 funds, what kind of capital are you going to put to work in the next 5 years? And also give me a rough idea as to what would be your portfolio size purely from commercial perspective in the next few years.
So we deploy across asset classes, both residential and office. Now, talking specifically commercial, I'll give a short answer and a long answer. I'll just try the long answer first. So look, we are a very focused strategy.
We like short answers actually, given the time constraint.
So look, our typical deal size is about $80 to $100 million, and we would like to do at least 4 to 5 of them over the next 24 months. That gives you a rough indication of what is the portfolio size we are looking at. So our strategy is very focused, very centered. Those deals typically require a lot of capital, and that is why, in fact, you've seen the capital which is required in large transactions. In fact, the deals have even exceeded $1 billion. So across 4 or 5 deals, $80 to $100 million, 4 or 5 deals is what our horizon is over the next 24 months.
Okay, understood. And in Resi, sir, I would like to understand from you what kind of projects are you taking up? Are you signing any JVs, platforms for your, I think you have been working on a Resi platform for quite some time. Any progress on that? And what kind of projects in portfolio are you giving in the market in the affordable segment?
We will continue to focus on mid-market and affordable housing. We will continue to focus on our own core areas. We will not move out of that. That's one. On the JVs, and we have signed quite a lot of development management projects. That has become a new flavor now, where returns are pretty high, and we have become a service company or a complete solution providing company.
Are these projects under the stressed projects that you acquired and sort of turning them around?
Plenty of stressed assets, which we have acquired, and we continue to acquire quite a lot in the pipeline. So the entire industry is folding into, all the smaller ones are folding into bigger ones. That's what is happening today. So we see a great opportunity in this development management model. So currently our portfolio is about 30% is development management, which is likely to grow further. So we become a solution provider company rather than a real estate developer at this point of time.
So what works for you in the distressed? I mean, the value?
Yes, it's an opportunity.
And what are challenges that come with such assets?
Yeah, challenges, out of 10 assets, what we see, 8 we have to say no. Maybe 1 or 2 only, the success rate is very, very low. But that is expected. So because of the projects, the nature and the stage what it is today, it becomes unviable. So we get in where there is a clear margins are available, and it's for us to execute and get delivered. That's very important. So that's the project.
But what's your outlook? I mean, are we going to see sales improve and a market back on track?
Market is on good track.
No, but
it's a myth again. It's a media creation that market is not good. Market is too good, and there is a
I think
big
you're
demand.
only looking at your numbers.
There is a big demand. There is a big demand on housing, affordable and mid-market segment. There is a huge demand. For example, we have projects today. I do not know the numbers, but completed inventory 0. Projects under construction where the delivery is likely to be in the next 2 to 3 years period, inventory is less than 10%. This is the reality today. And the moment we launch the project, it sells 50%, it sells. This is the reality today for good people, good developers. That's the reality. So there is a huge demand in the market. We are scaling up further and further to take this challenge, and it's a big opportunity. We don't want to miss this.
You're saying you're a good developer.
Any good developer has the opportunity to grow very good.
No, I'm just kidding. So then I think more or less we captured the opportunity, challenges, and outlook for the market. I'll start with you, Jay. Like I said, I have a small rapid-fire, set of questions that I'm going to ask you from each of the panelists, and try and understand that will summarize how the market will behave in the next 5 years. So first question in that context would be, how do you rate the policy initiatives taken by the Modi government in the last 5 years? And how do you rate them on a scale of 1 to 10, 10 being the best?
So I think actually I would say quite good.
Give a number.
Somewhere
Give a
between
number.
7 and 8.
On a scale of 1 to 10, give a number.
Somewhere between 7 and 8.
Okay. So for you?
10.
Sharad, for you?
7 to 8.
7 to 8. And Girish?
Probably 6 to 7.
Okay. So kind of, more than average, on a overall basis. And tell me, I mean, a lot has been done by the government in the last 5 years, and we have reported about it, talked about it. But what are the challenges? And here I'm talking about the broader real estate challenges, not specific to each asset class. What are the challenges that you want the new government to sort of take care of?
So I think they should try...
Give me 3 challenges.
Challenges? I think one is the regulatory front. They should probably do a single window clearance for all approvals. They should find a way to subsume the entire tax. They should include the GST and stamp duty and find a way to reduce that. And the third is if they can make the land acquisition a bit easier through digitization or some way where structuring a deal becomes easier. And that would be 3.
Those are your 3 points. Sharad?
At the risk of echoing his, I think digitization of land acquisition records is paramount and critical to bring us up on par with how it's done in the West. I think further liberalization and more efficiency in the approval process again on the land acquisition front. And I think more focus on FDI to further encourage foreign investment into the country should be a further key focus.
Okay, so from your Resi perspective?
Approvals and digitalization of records, which is very important.
Those are the 2
very
points.
critical.
Any third one you would like to add?
These two are most critical. These
Okay.
things, I mean,
Okay,
will
Jay,
make a big
from a broader sort of perspective.
No, so all of this and the fact that title-related sort of clarity sometimes takes a lot of time.
Mm-hmm.
So the digitization of the records, and once that's done, the title insurance should come into the market. That should actually help the market quite a bit.
Okay, so that about challenges. And the last question in that is, describe in 2 words for me how the next 5 years will pan out for real estate. Just 2 words.
Robust and stunning.
Okay, interesting. Sharad?
Not usually I'm caught off guard. I think it's going to be incredibly exciting.
Okay.
great period ahead.
Oh, interesting. From you?
Growth.
I asked for 2 words, actually. You guys are giving me only 1. Anyway.
I would say growth. More than anything else, this sector is poised for growth.
Okay, interesting. With that, we wrap it up. Thank you so much. And we tried our best to give you some perspective and insights on real estate market. And enjoy the rest of the day. Thanks.